Hey everyone, and welcome to our deep dive today. We're going to be tackling the crypto market, specifically the crypto market report that you sent over.
Right.
We've got a sea of red in terms of overall market performance, but trading volume
Yeah,
is through the roof.
that's right. We are looking at a 4.8% dip across the board, yet trading volume is up a staggering 117.23%.
Wow.
This tells us people are reacting. Maybe some are panicking, others see a buying opportunity, and some might be doing both.
Okay, so market sentiment is a little bit of a mixed bag, it sounds like, but there's one coin that's holding relatively steady. Bitcoin. Not only that, but its dominance in the market is actually increasing. Is this the safe haven narrative we've heard about finally playing out?
It's certainly tempting to connect the dots, but correlation doesn't always equal causation. To
Yeah.
understand what's driving Bitcoin's resilience, we need to look deeper. Bitcoin dominance, by the way, refers to the percentage of the total crypto market cap that Bitcoin represents. The fact that it's increasing suggests that investors might be moving their funds into Bitcoin as a more stable asset in a volatile market.
So potentially good news for Bitcoin holders. But let's dig into some of the specific headlines driving this. The report mentioned Bitcoin exchange reserves hitting a 7-year low. That sounds optimistic.
It could be, historically, when exchange reserves drop significantly. It often indicates accumulation by larger players like hedge funds and institutions. They're essentially buying up Bitcoin and moving it off exchanges into cold storage, which suggests a long-term bullish outlook.
Okay.
The report actually highlights a few metrics supporting this, like the increasing number of Bitcoin addresses holding significant amounts.
But if everyone's so bullish on Bitcoin, why is it still struggling to break through that $100,000 mark? I mean, the report did call it lackluster trading volume. Is that the only reason?
While low trading volume is definitely a factor, it's not the whole story. There's a psychological barrier at play as well. $100,000 is a major milestone, and breaking through it requires a significant surge in both buying pressure and overall confidence.
Remember, the market is still digesting the recent downturn, and it will take time for widespread conviction to return. Speaking of things taking time, let's talk about the FTX news. The report mentioned a $1.2 billion creditor repayment plan kicking off right after the presidential inauguration. Could this influx of cash back into the market be the catalyst Bitcoin needs?
That's the big question, isn't it? While the timing is certainly interesting, and there's some optimism about a potentially crypto-friendly administration, it's still too early to say definitively. We need to see how this repayment plan unfolds, and whether it triggers a broader market rally. Remember, the crypto market is notoriously unpredictable.
Point taken. Let's shift gears a bit and talk about some other interesting developments, like Tether's headquarters moving to El Salvador. It seems this little nation is doubling down on becoming a crypto hub.
Absolutely. This move further legitimizes El Salvador's decision to adopt Bitcoin as legal tender. Tether is the world's largest stablecoin, and its presence in El Salvador could attract other crypto businesses and investors, potentially creating a ripple effect throughout the region. It's a fascinating case study in how a small country can leverage crypto to position itself on the global stage.
Speaking of global players, there's a lot of M&A activity happening too. MoonPay acquired Helio, a Solana-based payment processor, and Chainalysis, the blockchain analytics firm, bought an AI fraud detection startup. What's the significance of this buying spree?
These acquisitions highlight the growing maturity and sophistication of the crypto space. MoonPay's move suggests a push towards mainstream adoption, making crypto payments more accessible to the average person. And Chainalysis' acquisition reflects the increasing importance of security and fraud prevention in a rapidly evolving landscape. This is all good news for the long-term health and sustainability of the crypto ecosystem.
Maturity is definitely a good thing.
Yeah.
But let's not forget about the risks. The report mentioned a potential vulnerability in the Uniswap wallet that could expose user seed phrases. This isn't just a whoops moment, right? This could have serious consequences.
You're absolutely right. This vulnerability underscores the critical importance of secure seed phrase storage. A seed phrase is like the master key to your crypto kingdom. If it's compromised, you could lose everything.
Oh, wow.
We strongly recommend considering a hardware wallet, which offers an offline, more secure way to store your seed phrase and protect your assets from hacks and vulnerabilities like this.
Solid advice, especially given the increasing sophistication of scams in the crypto space. The report actually touched on that, pointing to the recent Litecoin Twitter hack and fake token promotion. It seems like even seasoned investors can fall prey to these schemes.
Absolutely, in this fast-paced world. It's easy to get caught up in the hype and let your guard down. That's why it's crucial to always double-check information, verify sources, and never click on suspicious links. A healthy dose of skepticism can go a long way in protecting yourself from scams and making sound investment decisions.
We just finished exploring some pretty big market moves and trends, and now I'm really curious to dig into some of the more thought-provoking developments happening in the crypto space.
Absolutely. And one of the most intriguing and controversial developments we're seeing is the rise of projects like WorldCoin, which aims to create a global digital ID system using iris scans. They just hit a major milestone with 10 million verified users. But it's sparking a lot of debate.
10 million is a huge number. That said, the idea of handing over biometric data to a private company for a universal ID does feel a bit Orwellian to some. What are the potential benefits and drawbacks here?
It's a fascinating dilemma. On one hand, a universal digital ID could revolutionize access to financial services and opportunities for millions, especially in developing countries. Imagine a world where your identity isn't tied to paperwork or bureaucracy, but to a secure, verifiable biometric scam. That's the potential of WorldCoin.
That sounds great in theory. But what about the privacy concerns? What happens if this data gets hacked or misused by governments or corporations?
Those are valid concerns, and the success of WorldCoin hinges on its ability to address them transparently and convincingly. They'll need to demonstrate robust security measures, data encryption, and user control over their own information. The project's long-term viability will depend on building trust and proving that the benefits outweigh the risks.
It seems like this tension between innovation and regulation is a recurring theme in the crypto world. We saw that with the poly market situation in Singapore and the Mudrax withdrawal freeze in India, as mentioned in the report.
You're right, those are prime examples of how governments are grappling with this rapidly evolving technology. It's a complex landscape, and jurisdictions are taking different approaches. Some are more cautious, focusing on investor protection and preventing illicit activities. Others are more open, seeing crypto as a driver of economic growth and innovation. El Salvador, for instance, is going all in on Bitcoin.
It's been pretty interesting to watch El Salvador's Bitcoin experiment unfold. They were the first country to adopt Bitcoin as legal tender, and now we're seeing Tether setting up shop there. Is this move likely to attract more players to the region?
It's certainly a possibility. Tether's presence adds legitimacy and infrastructure to El Salvador's crypto ecosystem. If this leads to more businesses and investors setting up shop there, it could have a domino effect, making the region a more attractive hub for crypto activity.
That would certainly be a bold move. For a country that's been facing some economic challenges, it seems like El Salvador is betting big on crypto as a path to a brighter future.
They're definitely taking a bold and unconventional approach. Only time will tell if it pays off. But it's a fascinating case study to observe. It raises important questions about the role of crypto in emerging economies and the potential for financial innovation to drive positive change.
So we've got this interesting dynamic playing out. Countries experimenting with crypto, companies pushing for mainstream adoption, and projects like WorldCoin challenging our notions of identity and privacy. It feels like the crypto space is constantly evolving, and it's hard to keep up.
That's what makes it so exciting, isn't it? There's always something new happening, some new development or innovation to analyze and debate. It's a constantly shifting landscape, which can be both exhilarating and daunting.
Speaking of exhilarating, there's been a surge of institutional interest in crypto, as we touched on earlier. The report highlighted Bitcoin accumulation by hedge funds and institutions. What's driving this trend, and what does it mean for the average investor?
Institutional investors are attracted to crypto for a variety of reasons, including its potential for high returns, its scarcity, and its role as a hedge against inflation. As more institutional players enter the market, it brings legitimacy, liquidity, and stability to the space.
So it's not just retail investors anymore. The big players are starting to see crypto as a serious asset class.
Exactly. This institutional influx is a sign of growing maturity and acceptance. However, it also highlights the importance of due diligence and risk management for individual investors. It's crucial to understand the underlying technology, the market dynamics, and the regulatory landscape before making any investment decisions.
And as we've discussed, security is paramount in this space. The report mentioned the Uniswap wallet vulnerability, and the Litecoin Twitter hack served as a harsh reminder that even established players can be targets. What can investors do to protect themselves?
Vigilance is key. Never click on suspicious links. Always double-check information from multiple sources. And consider using a hardware wallet for added security. It's also crucial to stay informed about common scams and phishing techniques. Remember, knowledge is your best defense in the crypto world.
That's great advice. So we've explored a lot of complex topics today, from market volatility and regulation to the ethical implications of projects like WorldCoin and the growing influence of institutional investors. It's clear that the crypto space is constantly pushing boundaries and challenging the status quo.
Absolutely. And on that note, we want to thank you for joining us on this deep dive into the crypto market. We hope this has given you a better understanding of the trends, opportunities, and challenges shaping this dynamic space.
Remember, the crypto world is full of surprises. Stay curious, stay engaged, and most importantly, stay informed. Until next time.